The next chapter, Companies, Cost Records and Audit Rules 2014, which is commonly called as CRAR. Companies, Cost Records and Audit Rules. And one more thing would like to tell, this is the largest chapter after cost accounting standards in cost audit. And first is like cost accounting standards, 24 standards, but అందులో ఒక్కొక్కటి ఒక్కో స్టాండర్డ్, but this is a single chapter but the longest topic. And here you are having direct theory questions, you will be having practical questions, you will be having CRD questions, you will be having assignment problems, you will be having self practice, you will be having, and also you will be having problematic in this chapter. If I was not wrong, around 12 or 13 problems kuda untayi. 13. So as I told you that this is the largest chapter. Shall we start now? Okay. So totally there will be 6 rules, Nana. What are the 6 rules under rule 1, rule 2, rule 3, rule 4, rule 5, rule 6? Completed. Sorry. So listen, Companies, Cost Records and Audit Rules 2014. Just small introduction. Start.
Introduction. The Companies Act 2013 empowers the central government to make rules in the area of maintenance of cost records by the companies engaged in the specified industries, manufacturing, providing such goods or services, and for getting such cost records audited. Wide section 148.
Right. In section 148, did you remember what is subsection 1? Maintenance of cost records. What is subsection 2? So section 20, Companies Act 2013 empowers central government to make some rules, and those rules are with respect to maintenance of cost records and audit. So these rules are purely relating to maintenance of cost records, so cost audit, maintenance of cost records and cost audit. Clear, everybody? Likewise, did you remember in each and every act there will be section 1 and section 2? What is section 1? Section 2 is definition. Section 1 is short title, commencement and applicability. Like what is the name of that act and to what it is applicable and to what extent it is applicable. That is what given. Short title and from when it is applicable. Commencement and applicability. Even here also the same things will be there. Rule 1 will be short title, commencement and applicability. Rule number 2 will be definitions, and the same like section 1, section 2, rule 1, rule 2 will be there. Anyways, who is empowering? Companies Act 2013 is empowering central government. Clear, everybody? To frame the rules with respect to dash and dash, cost records and cost audit. Clear, everybody? Next.
Thus, it is the subordinate legislative power of the central government to make rules for maintenance of cost records and audit thereof in respect of specific industries.
So, thus it is the subordinate legislative power of the central government. It is the subordinate legislative power of central government. Central government is generally having legislative power. Am I correct or wrong? But here the legislative power is entrusted by Companies Act to central government. Who framed Companies Act? Of course, central government. Ante kada? Yes, Parliament. An act should be formed. An act should be given applicability, framed, formed, etc. and etc. only with the assent from Parliament. So, Companies Act 2013 is literally framed by central government, and in that also they are telling that frame the rules with respect to cost records and cost audit. With respect to cost records and cost audit, the same is entrusted to central government. Again, clear, everybody? Who is entrusting? Companies Act 2013. Clear, everybody? Indirectly, central government is ordering central government to frame the rules. until like after getting an act, after obviously there will be some rules. Am I correct or wrong? Go ahead.
Accordingly, the central government made from time to time several notifications or orders ever since the provisions were made in the erstwhile Companies Act 1956, as well as under the current Act 2013. The original rules under Companies Act 1956 were suppressed and
Superseded.
companies
It's okay.
companies cost records and audit rules 2014 issued.
So what they are telling is that who is giving power to whom now? Companies Act 2013 is giving the power to central government to frame the rules with respect to dash and dash, cost records and cost audit. Is cost records and cost audit applicable to each and every company or only certain industries? Only certain industries. Am I correct or wrong? So accordingly, CZ made some rules and regulations. Accordingly, CZ made some rules and clear everybody. Old Act is there. What is Old Act? Companies Act 1956. That is replaced with Companies Act 2013. Old rules used to be there. Even those rules were totally eradicated whenever new rules, companies, cost records and audit rules 2014 were introduced. Act Companies Act 2013. Rules, companies, cost records and audit rules 2014. Clear everybody? And current effective rule is Companies Amendment Rules 2019. Though companies 2014 still remains the principal rules. Ante basic rules are given in 2014. Slowly everything were amended. 14, 15, 16, 17, 18, 19, 21. But as of now in our syllabus only up to 2019 rules are there. We are going to learn all those things. Respond everybody pakka. Legislative power is in the hands of central government. Clear everybody? Strictly speaking, there are three departments: administration department, legislative department, judiciary department. Likewise, judiciary is nothing but a kind of legislation. So, executive okati, legislative okati, judiciary okati. Clear everybody? So, but what happened, the legislative power is in the hands of legislative department. Hey, is it clear? Let me make it more clear. సెంట్రల్ గవర్నమెంట్ చెప్పండి. జ్యుడిషియరీ ఒకటి, ఎగ్జిక్యూటివ్ ఒకటి, లెజిస్లేటివ్ ఒకటి. Who will frame the rules and regulations? Legislative. Who will follow the rules and regulations? Who will give the judgments, etc. and etc. This is what the general bifurcation of the power. Clear everybody? Administration is administration department, executive department. Clear everybody? Framing department, verdict department, judiciary. It will give the final verdicts. They respond, is it clear? Now, generally, power to frame rules and regulations is in the hands of legislative department. Power is there to frame the rules and regulations. Law will be framed by legislative department of central government. Is it clear? They respond, is it clear? Now next, what happened? This legislative department has actually issued Companies Act 2013 through Parliament. Now Companies Act 2013 is entrusting again to central government to frame rules with respect to cost records and cost audit. Clear everybody? Now who will frame these things, sir? Of course MCA. Who will frame and Ministry of Corporate Affairs, and hence this is nothing but subordinate legislative power. This is nothing but original legislative power is with legislative department of central government. Subordinate legislative power is with MCA of central government with respect to cost records and audit rules. With respect to a respond, is the whole concept clear? Huh? Tell me everybody, central government is divided into, tell me, judiciary, executive, legislative. Who will frame the rules and regulations? Who has to follow those things? Checking whether it have followed properly or not. Is it clear everybody? So now who has to frame laws, rules and regulations? Legislative department. So power is with dash hands with respect to legislations. Legislative department. Clear everybody? Who issued Companies Act 2013? Legislative department of central government, and the same act was passed in parliament. Respond, is this absolutely clear? Huh? Next, now in this act they have clearly mentioned that the power of framing the rules with respect to cost records and cost audit is entrusted to MCA, which is nothing but one of the wing of central government, and thus now MCA is having dash power, subordinate legislative power. What is it called as a? Is the whole concept clear? Now who is framing the rules and regulations? I mean, as per companies cost audit and record rules, MCA. Is the whole concept clear everybody? Previously you used to have rules under Companies Act 1956, but whenever new act was introduced, these were superseded and new rules. Companies cost records and audit rules 2014 were introduced. Hey, what is that name, sir? Don't forget the name, okay? Companies cost records and audit rules 2000. Respond pakka. Done. Next, history of rules in India.
History of rules in India. There have been two major transformations in the cost records and audit rules over the last few decades.
Did you remember likewise we are initially introduced the board? Did you remember genesis of cost audit? Genesis of cost audit. Board was formed in the year 19 and in 1960 for the first ever time cost audit was introduced. Yes or no? Dash basis. Company specifica, industry specifica. Company specific basis initially. Like that 44 industries were covered under that. Clear? Up to 2008 the same was being continued. In 2008? No. In 2008 a committee was formed. Even a CA also can do the audit. After that the main provision was deleted but sub provision was there. But whenever in 2013 act around the total provision was deleted with respect to CA to conduct a cost audit, and now it is the sole power to CMA to conduct the Gurtunnaya. So genesis of cost audit చూసుకోండి ఒకసారి. In 2008 a committee was formed. In 2011 they have given the report. కనిపించిందా? And in 2011 converted to industry specific. Is it clear? Now come back to here. Company based regime shifted to an industry based regime. Prior to 2001, it was not actually 2001, it was 2011. Clear everybody? Akkada aa chapter contradiction vastadi, but it was 2011. Okay. So history of rules in India. First one, there have been two major transformations. You know the two major transformations? Sir, first question, why to introduce new rules? Question clear? Huh? Likewise, Companies Act 1956 is there and it was totally shifted to Companies Act 2013. Why? You know the major reason of shifting the act? Not some rules. 1956 act was totally amended. With the issue of amendments, by the time with the latest amendments, if they are comparing it with the original act, there is no matching at all. Hope you might have got what my intention. Initially they issued the act. Amendments. Now they are having the latest amendment book. They were having the original act. No way comparable. And hence they have decided this is the time to shift to the new act. And slowly they have shifted many things, and almost everything was revamped in 2013 act according to the latest environment of the world. By considering many things, we have changed. In the same way, Companies Act 1956 rules with respect to cost audits were also superseded, and we have introduced Companies Cost Records and Audit Rules 2000, and the main reasons are two. Number one, initially we used to have company specific, but later on our regime shifted to industry specific. Initially for dash cost audit is mandatory for company, later on it is dash cost audit is mandatory. Industry provided basing on the limits of net worth and turnover. Basing on the limits of net worth and respond everybody pakka. Any doubts to anyone? Sir, is it clear? Initially dash basis, company specific basis, later on dash basis. The shift was happened, am I correct or wrong? The shift was happened from companies to industries. Initially cost audit is mandatory for dash specific companies. Now it is mandatory for dash specific industries, provided companies which are having said turnover and said net worth limits. Is the concept clear? So this is first transformation and first reason why we are shifting the rules from 1956 to 2014. Is it clear? Next important thing, multiplicity of rules to unity of rules. Very common. Sir, initially cost audit is mandatory for different companies. Am I correct or wrong? Companies, not for entire industries. So automatically only some part of industries were covered here. Around 44 industries and only 44 industries were covered here. Due to which what happened, they have framed rules and regulations for each and every product. For electricity department, one style. Telecommunication department, one style. For hospitals, one style. Banking, one style. Sugar, one style. Textile, one style. Rubber, one style. Electricity, one style. Arms and ammunition, another style. Hospitals, another style. Like this it was. Ante, if a single company is producing steel, if a single company is producing rubber, if also a single company is producing what is it called, product, like if it is also in telecommunication, it has to follow 3 different rules. Clear everybody? So initially it was like that, multiplicity of rules is there, but now it is a time to shift for unity of rules. Clear everybody? So earlier MCA notified separate cost accounting record rules for various industries. This implied that multi-product companies were required to comply with multiple rules, and multiple cost audit reports were prepared for the same company, which became too clumsy. But you are not having any extra time period. You have to complete your cost audit within 180 days from the end of the financial year. You have to complete the cost audit within 180 days from the, if a company is engaged in 3 different products, 3 different rules for maintenance of cost audit report, for maintenance of cost books and cost records, 3 different rules for doing cost audit, 3 different cost audit reports. A very big headache and very clumsy. But there's no greater time limit at all. Respond clear. But in financial records, they are going to show everything in a unity basis. Total sales will be there, total purchases will be there, total wages will be there, total expenses will be there. Even reconciliation from cost records to financial records had also become very, very difficult. So it's a time to shift from this multiplicity of rules to unity of rules. Clear everybody? However, all these kind of things were changed to unified system of rules, whereby different rules were merged into a single system. Therefore, the menace of multiplicity of cost records and cost audit report was resolved. Menace is nothing but problem. Respond clear, everybody? Hey, what is rule number 1? I mean, why we have shifted from old rules to new rules? Reason number 1, company specific to industry specific. Maybe existing rules are not sufficient for industry specific, and hence there is a need for change. Next, reason number 2, multiplicity of rules to unity of rules. Respond, everybody, pakka. Hey, as of now, is the concept absolutely clear to each and everyone? What is the chapter we are learning? Companies, cost, records and audit rules 2000. Sir, what are the 3 departments of central government? Executive, judicial, legislative. The legislative power is always in the hands of legislative department of central government. It will frame the rules and regulations. Now, Companies Act is also giving a power to central government to frame rules with respect to cost records and cost audit. Now, who will frame the rules and regulations? MCA. Clear, everybody? Thus, MCA is having dash power now. Legislative power is subordinate legislative power. Legislative power is in the hands of legislative department, but now MCA is having subordinate legislative power. Respond, everybody, pakka. And initially you used to have the rules, Companies Act 1956, but with the new introduction of Companies Cost Records and Audit Rules 2000, old rules were superseded. What are the 2 reasons? 2 main reasons for introduction of new rules, Nana? Company specific to industry specific okati, multiplicity of rules to unity of rules. Respond, everybody, pakka. 370. Now each and every act is applicable to entire India, whole of the India, including Jammu and Kashmir. Clear, everybody? So now rule number 1, even Companies Act 2013 is also applicable to each and every part of India. Even companies cost records and audit rules are also applicable. Is it clear? Start reading.
These rules may be called the Companies, Cost Records and Audit Rules 2014.
అదే మన చాప్టర్ నేమ్ కూడా. Short title. Short title is nothing but short name. And what is that short cute name, Amma? Companies, Cost Records and Audit Rules 2000. 2014. Next.
They shall come into force from the date of their publication in the official gazette.
Abba. From when this rules is applicable ante, whenever they are telling a date and it was published in official gazette, from that date this rules are applicable. Next.
The companies who have already filed their cost audit report in form CRA4 for the financial year 2018 to 19 with the central government before the publication of this notification are not required to file the cost audit report for the said financial year.
So likewise I said you are having even amendments. Gurtunda? Amendments are like 2014 original base principal rules. Next 15, 16, 17, 18, 19. But in this chapter we are learning only up to 2019. Now listen very, very carefully. Sir, latest amendments are 2019. Am I correct or wrong? So if at all the amendment rules were issued in the year 2019, you will be following it generally from 2019 and 20. Am I correct or wrong? Those cost auditors who have already issued the cost audit reports for 2018-19 by following the old rules before the release of these new amendment rules, it is not required to file a new cost audit report for the said financial year. Say for example, sir, you have to issue cost audit report within 180 days from the end of financial year. This is end of financial year and say this is within 180 days. If at all somewhere here new rules are issued, but already you have given a cost audit report by this time. Clear, everybody? So cost auditor had already issued cost audit report before the introduction of new amendment rules. In this case, once again, no need to issue the cost audit report under the new rules. This one clear, but say for example, if at all the cost auditor is not giving the report before the issue of new amendment rules, then cost auditor need to follow the new amendment rules and he needs to prepare a new format of cost audit report. Sir, ardhamainda? Okay, next definitions.
Definitions. In these rules, unless the context otherwise requires, Act means the Companies Act 2013.
What is the Act? Act is nothing but Companies Act 2013. Next.
Customs Tariff Act heading.
Hope you know what is Customs Tariff Act heading. Something like you're having tariff rates amma. Also ila untundi heading, subheading, HSN, harmonized system of nomenclature, alphanumeric system you will be having. Gurtunda evanna GST lo vachinda sir? HSN even you will be getting even in customs also. So Customs Tariff Act heading means the heading as referred to in additional notes in the first schedule of Customs Tariff Act. I'll tell you, I'll show you, listen. Heading are indicated with numbers. No or yes. Product heading will be generally indicated with numbers. Electricals ante saripodu. In electricals again LCD LED. For that there will be one number. Clear everybody? Yes, you will be having product codes. All those products codes is nothing but tariff headings. Like if you have seen here right from chapter 1, custom duty of live animals, meat, edibles, మొత్తం ఇలా ఉన్నారండి. Hope you are able to see that. Chapter 01, if it is so Customs Act tariff heading is nothing but is not something like a new heading is here. Whatever the heading that you will follow under Customs Act, the same heading also will be followed under Companies Cost Records and Audit Rules 2014. Is it clear? Next.
Cost accountant in practice.
As simple as such. Tell me who is a cost accountant in practice. First of all, he has to clear the final course which is conducted by Institute of Cost and Management Accountants of India, by whatever name it is called, and next he should hold the valid certificate of practice. Is it clear? Then that person shall be called as a cost accountant in practice, whereas he can be either an individual or a partnership firm or even a body corporate, only LLP. Except LLP, a body corporate can't become a auditor. Clear everybody? Next.
Cost auditor.
Sir, cost auditor is the person, who was appointed as an auditor by that company. Who can be appointed as a cost auditor? Only a cost accountant in practice. So only a cost accountant in practice can become a cost auditor. Whichever person appointed by the company as cost auditor, he is called as a cost auditor, provided he must be a CMA in practice. Next.
Cost audit report.
Whichever is duly signed by the cost auditor as per the formats that were prescribed by Institute of Cost and Management Accountants of India, by whatever name it is called, and it includes all the rules, attachment, annexures, qualifications, observations which are included with or included in such report, either included in that report or included with that report. Along with that report you might include an annexure, or in that report itself there might be an annexure. Next.
Cost
Sir,
reports.
అర్థమైందా? With or included అన్నది అర్థమైందా అంటున్నా. Cost audit report is this one. For that you are adding another annexure, that is with. Included in the cost audit report, and in that report itself an annexure is there. In. Next.
Cost records.
Cost records are nothing but the data with respect to utilizations of material, labor and other items. Other items ante? Check out the same. Labor, materials, other items. Applicable either to production of goods or provision of services. Either to production of goods or as provided as per section 148. Did you remember section 148 subsection number 1? What is subsection number 1? Maintenance of cost records. There I told you cost records, how to maintain is given in CRA 1. Form CRA 1. Also I told you form CRA 1 is having any format or not having format? Not having any format, but it is having all the details. CRA 1 is not having any format, but it is having all the details. Next.
Cost records. Indian accounting standards.
Indian accounting standards, or those standards which are issued by Institute of Chartered Accountants of India, and the same were approved by central government with the recommendation given by NFRA. Gurtunda? And through section 133. Through section 133 of Companies Act 2013 and Companies Indian Accounting Standard Rules 2015 are there. Likewise, how we are having rules? Companies Cost Records and Audit Rules. In the same way, Companies Indian Accounting Standard Rules 2015 are there. Respond clear.
All other words and expressions used in these rules but not defined and defined in the Act or in the company's specification of definition details rules 2014 shall have the same meanings as assigned to them in the Act.
ఇది చాలా చాలా తెలివిగా డ్రాఫ్ట్ చేసిన ఒక నోట్ అన్నమాట. If at all we missed any definitions to define under this rules, and if that expression or if that word is having definition as defined in Companies Act 2013 or Company Specification of Definition Details Rules 2014, you follow all those definitions. Ardhamainda? If you forget or if some definition was not included in these rules, then don't find the new definitions. If already the definition was defined in section 2 of Companies Act 2013, follow that. And follow Company Specification of Definition Details Rules 2014. Whatever are given there, you just follow all those things. Great. Rule number 3. Application of cost records. So rule number 3. What is subsection 2? Okay, so now rule number 3 of CRAR 2014 has to be linked to subsection 1 of section 148. Rule number 3 of CRAR 2014 has to be linked with subsection 1 of section 148. Go ahead.
Including foreign companies defined in clause 42 of section 2 of the Act engaged in
Adigo, including foreign companies. They actually did not define what is foreign companies in these rules. Now what are foreign companies? And you don't come to one conclusion. You go with Act. You go with the reference. Whatever in Companies Act 2013 foreign companies is defined, you have to take the same. Hey, clear? Go ahead.
engaged in the production of goods or providing services specified in the table below, having an overall turnover from all its products
Sir,
and services.
once again, one more point you have to become very, very careful. Which are engaged in production of goods or providing services. Which are engaged in and providing services. Hey, straight question. Cost audit is applicable or cost records are applicable only for those industries which are engaged either in production or manufacturing or processing or assembling, we call, and also providing the services, but not for trading, but also I told you for some portion of trading also cost audit and cost records are applicable. Gurtunna? That we will learn here. Next.
Turnover from all its products and services of rupees 35 crores or more during the immediately preceding financial year shall include cost record for such products or services in their books of accounts, namely.
Sir, if you observe, rule 3 is divided into two parts. Part 1 is regulated sectors. What is part 1? Part 2 is non-regulated sectors. What is part 2? Non-regulated sectors. Respond everybody, pakka. So, for these two rules, two parts. Rule number 3, part 1, part 2. What is part 1? What is part 2? Sir, listen very, very carefully. Specified in the table below, having an overall turnover from all its products and services of 35 crores or more. From all its products or services. From all its products or services, which should be more than or equal to 35 crores or more in the preceding financial year. Respond everybody, pakka. Check out rule number 3. What is rule number 3? Maintenance of cost records. What is rule number 3? Now he is talking about applicability of maintenance of cost records. For which companies cost records is mandatory? Whichever companies which are engaged either in production of goods and rendering of services as stated in the table below, which might be either table 1 or table 2, from overall turnover from all its products and services is more than or equal to 35 crores. Respond everybody, pakka. Hey, now listen very, very, very carefully and answer. Company is there. This company is producing 3 products, A, B and C. Turnover in the preceding financial year, immediate preceding financial year, 20 crores, 20 crores, 20 crores. All the 3 products are covered under table A. Clear everybody? Next, second example, A, B, C. These 2 products covered under table B. This is covered under table A. 20 crores, 20 crores, 20 crores. Next, A, B, C. Covered under table A, covered under table B, not covered. 10 crores, 10 crores, 40 crores. Clear everybody? Sir, is the example clear? Now answer me, for which company or in which case cost records are mandatory to maintain? Case 1, case 2, case 3. All the 3 cases or only case 1 and case 2? Sure? Hey, why all the 3 cases? Case 1 is okay for me. Case 2 is also okay for me because these 2 are actually covered under both table A and table B and the total is exceeding 35 crores. What about case C? Yeah, applicable or not applicable? Why applicable? You have to check out the overall turnover from all its products, not for table A and table B. Is it clear? Hey, pakka. Now tell me, for company C also, it is applicable. Only for product A and product B. Not for product C. Is it clear? Because only table A and table B are covered under. Product A and product B are covered under table A and table B. Product C is not covered. Hey, clear? Check out very, very carefully. To find whether applicable or not, you have to consider the turnover of all the products and services. If it is more than or equal to 35 crores, then you have to start maintaining the cost records only for those products which are covered under table A and table B. Logic clear? Hey, is the logic clear? What is rule number 3? Applicability of cost records. What is rule number 3, Nana? Applicability of cost records. To check out the applicability, you have to count the turnover of all the products and services, and it should be more than or equal to 35 crores. If yes, then all such companies maintenance of cost records is applicable only for those products which are covered under table A and table B. Respond everybody pakka. Hey, is it clear? Now check out. Say for example, I'm having product A, product B, product C. Turnover from product A is 0, from product B is 20 crores, from product C is 20 crores. This is covered under table A, this is covered under table B, this is not covered. Question number 1, applicable or not applicable? Question number 2, for which products? Only B. Strictly speaking, A and B. But A turnover is not there kada, and hence generally not applicable. Exception, A might not have turnover, but A might have produced ga. Logic clear? A might not have turnover, but A might have produced, and hence it is applicable for both A and B. Don't fall just in the trap of turnover. If the work is done, you have to maintain the cost records. You have to maintain the, respond everybody pakka. Any confusion to anyone? Is it clear? What is rule number 3? Applicability of maintenance of cost records. Cheppali, what is rule number 3, amma? Applicability of maintenance of, for which companies it is applicable? Companies which are engaged in production of goods and rendering of services, and you have to check out the limit cheppandi. Overall turnover from all its products and services greater than or equal to 35 crores. Clear everybody? To check this limit, current year or preceding year? Preceding year. Clear everybody? And then maintenance of cost audit records are applicable for those products which are covered under table A and table B. Table A is dash sector, regulated sector. Table B is dash sector, non-regulated sector. Chapali, what is table A? What is table B? Regulated sector ante each and every industry is having specific regulator. Each and every industry is having specific. Clear everybody? Did you remember subsection 1 of section 148? What is that? Maintenance of central government will take a decision to apply maintenance of cost records to a particular company or not. If that particular industry is regulated, then it will discuss the same with regulatory body first, and then it will give the applicability. Idi gurtunda? I told you about banking at that moment. For banking sector, whether cost records is mandatory or not, it has to discuss with RBI, and then it has to take the suggestions and comments of RBI, and then it has to give the order. They respond clear. For the last and final time, tell me what is rule number 3. Applicability of maintenance of, applicable to those companies which are engaged in production of goods and rendering of. Tell me the limits, Nana. You have to check the limit for turnover. Current year, last year. Preceding year turnover from all the products and services whose turnover is exceeding more than or equal to 35 crores. Clear everybody? If yes, then it is applicable to those products which are covered under table A and table B. Pakka. What is table A? Regulated sector. What is table B? What is table A? Regulated sector. Table B. Start. Number 1, telecommunication. Because if you observe here, listen, I'll tell you. I can tell you what is propellant powder. Propellant powder, prepared explosive other than propellant powder, safety fuses, detonating fuses, percussion, detonating caps, అవన్నీ అడిగితే నాకు తెలీదు. చేసుకోవడమే. Because, listen. I'm very serious about it. Because you're having around 33 industries covered under table B and 6 industries covered under table A. Clear everybody? Under table A, 6 industries, table B, and on a whole 6 plus 33. 39 industries were covered. How many? Initially 44 industries with company specific. But now it's not company specific at all. It is industry specific. How many industries are covered? 6 plus 33. 6 is regulated. 33 is, and 6 comes under table. 33 comes under table. Clear everybody? And under table A, I can tell you a simple shortcuts like DF PET. See here, drugs, fertilizers, petroleum, electricity, telecommunication and sugar. Hey, clear? DF PETs, drugs and pharmaceutical, fertilizers, petroleum, electricity, telecommunication, sugar industries. All these industries are covered. Hey, respond, is it clear? And each and every industry is also having specific regulators. Each and every industry are having specific regulators. Respond everybody, clear? What is the sector? Regulated sector. For each and every industry there are specific regulators. How many regulated sectors are covered here? 6. What are the 6 industries? DF PETs చెప్పండి. Drugs and pharma ఒకటి, fertilizers ఒకటి, petroleum ఒకటి, electricity ఒకటి, telecommunication ఒకటి, sugar ఒకటి. Respond everybody pakka. Again, you at least give reading once. At least once give thorough reading for each and every point. Because if you have thought something like sugar industry is covered, you might not know that industrial alcohol industry is also covered. Because it was not just sugar, it was sugar and industrial alcohol. And okkasari top to bottom you just need to read that. Anyways, please start reading.
Telecommunication services made available to users by means of any transmission or reception of signs, signals, writings, images and sounds or intelligence of any nature and regulated by the Telecom Regulatory Authority of India.
So as regulated by Telecom Regulatory Authority of India, which is nothing but TRAI.
Telecom Regulatory Authority of India Act 1997, including activities that requires authorization or license issued by the Department of Telecommunication, Government of India under Indian Telegraph Act 1885.
So license will be issued as per Indian Telegraph Act, but the regulatory body is nothing but TRAI, Telecom Regulatory Authority of India. Is it clear everybody? All the telecommunication services. For your kind information, cost records will be made applicable either to those companies which are involved in production of goods or rendering of telecommunication is service a good anana. Clear everybody? Next.
Generation, transmission, distribution and supply of electricity.
Generation, transmission, distribution, supply. Clear everybody? Generation, transmission, distribution and supply of electricity regulated by the respective Electricity Act 2003. And of course you might have learned the same in CMA Inter with the specific boards SCRC and CERC also. State Electricity Regulatory Commission, Central Electricity Regulatory Commission, and you are having State Electricity Board, Central Electricity Board also. Guttunaya? And each and every word like what is generation, what is transmission, what is distribution, what is supply, everything is defined as per Electricity Act 2003. This is not defined as per Companies Act amma. Hey, respond, is it clear? Duff fellow. Next. So even this is also electricity. What is this, Nana? Service. Next.
Petroleum products, including activities regulated by the Petroleum and Natural Gas Regulatory Board under the Petroleum and Natural Gas Regulatory
PNGRB, which is nothing but Petroleum and Natural Gas Regulatory Board under the Petroleum and Natural Gas Regulatory Board Act 2006. Likewise, board is RBI, Act is RBI Act. Like that, in the same way, PNGRB and PNGRB Act 2006. And petroleum is good. Next.
drugs and pharmaceuticals.
Of course, goods.
Fertilizers.
Of course, production of goods.
Sugar and industrial alcohol.
Production of goods. Respond everybody, Pakka. That is the end of table A. Table A dash sector. Table B dash sector. Unregulated or non-regulated sector. Tell me the coverage under table A. 6 industries. DF pets. What are all the things? Drugs. Pesticides. Drugs and pharma. Fertilizers. Petroleum. Electricity. Telecommunication. Sugar and industry. Regulated or non-regulated? Now we are going to start table B, which covers non-regulated. వాడు ఎవడో చెప్తాడు చూడండి, నువ్వు అనుకున్నదే ఫిక్స్ అయిపోతావు అంతే, క్వశ్చన్తో సంబంధమే లేదు అసలు నీకు. సరే, స్టార్ట్ విత్ టేబుల్ బి, నాన్ రెగ్యులేటెడ్ సెక్టార్స్.
Non-regulated sectors. Machinery and mechanical appliances used in defense, space, and atomic energy sectors, excluding any ancillary items or items. Explanation: for the purpose of this subclause, any company which is engaged in any item or items supplied exclusively for use under this clause shall be deemed to be covered under these rules.
Listen. Machinery and mechanical appliances which are used either in defense, space, atomic energy sector, excluding ancillary items. Ante, there's a company which is manufacturing the machines and mechanical appliances which are used by defense, space and atomic energy companies of India. For all those companies, cost records are applicable with respect to table B. Is it clear? But it is excluding the ancillary items. Likewise, machine might need some parts, which is an ancillary item. We are not concentrating on those ancillary items. We are concentrating on the original machinery and mechanical appliances. Respond, is it clear? What is point number 1? Machinery and mechanical appliances for defense, space, atomic energy. Defense, space, whichever the companies manufacturing all these machines, for all those companies, maintenance of cost records is applicable, provided if it is satisfying the set conditions, like more than or equal to 35 crores. Respond, Pakka. It is including ancillary items or excluding ancillary items. But there's an explanation, listen very carefully. For the purposes of this, any company which is engaged in any item or items supplied exclusively for use under this clause shall deem to be covered under these rules. Any company which is engaged in any item or items supplied exclusively for use. Say for example, I am manufacturing a machine and that machine is exclusively used in a kind of defense. So I need some raw material, kada? Yes or no? That raw material is supplied by some other company. Clear? Items supplied exclusively for use. If the items supplied by that company are exclusively used by the company only for the purpose of atomic energy, defense and space, in such a case, all such kind of suppliers are also covered under this clause. Respond clear? Check out. For the purposes of this subclause, any company which is engaged in any items or items supplied exclusively for use under this clause. Use under this clause, and use under machinery, mechanical appliances which are used in defense, space, atomic energy. Even those companies are also deemed to be covered. Not only direct manufacturers but also indirect manufacturers. Likewise, a kind of raw material suppliers. Respond, is it absolutely clear? But one point you have to be careful, exclusively for use. And if at all there is a supplier who is supplying for your company and also for some other company, And if at all these two companies are exclusively using the machineries or exclusively preparing the machineries for atomic energy, space and defense, aithe applicable. If one company is engaged in supplying the machinery for atomic energy, space and defense, and another company is not under this purview at all, then it is not applicable. Ardhamainda? A limited is there, supplying raw material to P limited and K limited. A is supplying raw material to P, and check out whether P and K are exclusively manufacturing the machines for defense, space, atomic energy. If yes, then even for A limited also table B is applicable. Clear? If at all K limited is not engaging in manufacturing the machines for defense, atomic energy and space, but P limited is engaged, in such a case the entire non-regulatory sector is applicable only for P limited but not for K limited but not for A limited. Logic clear? Not for K, not for A, only for P. Pakka? So tell me point number 1. What is point number 1? Machinery and mechanical appliances used in defense, space, atomic energy, including ancillary items, excluding ancillary items. And you need the entire machinery but not the parts or spares kind of things. Clear? Whole machinery but not ancillary items. Additional explanations. Even those companies which are exclusively included in supplying of these materials, and even those companies also covered under this clause. Pakka. Next.
Turbojets and turbo propellers.
For turbojets and turbo propellers also it is applicable. Next.
Arms and ammunitions and explosives.
Sir, arms, ammunitions, explosives. Arms and ammunitions are nothing but a kind of weapons. Army using guns, etc. and etc. or some kind of heavy machinery they will be using. Okay. For all such kind of things, even explosives. For all such kind of things, maintenance of cost records is mandatory but covered under table B. That is like non-regulatory sector. Next.
Propellant powders, prepared explosives other than propellant powders, safety fuses, detonating fuses, percussion or detonating caps, igniters, electric detonators.
Goes with other than propellant powder here. This other than propellant powder is applicable for prepared explosives. There are something called prepared explosives. For prepared explosives it is applicable but not for propellant powder under prepared explosives. But for general propellant powders it is applicable. Is it clear? General propellant powders it is applicable. Ante meeku etla cheppali ante simply like for spares it is not applicable, but spares which are included in the machine it is applicable. For spares it might not be applicable, but spares included in the machines it is applicable, since the entire machine is applicable. Prepared explosives other than propellant powder it is applicable. And for all some fuses, igniters, etc. and etc. all such kind of things applicable. Next.
Radar apparatus, radio navigational aid apparatus and radio.
All the kind of radio signals. Radar apparatus, radio signals, radio navigational, remote control apparatus, for all such kind of things applicable. Next set, Amma. Number 1 is machinery and mechanical appliances which are used in defense, space, atomic energy. Clear everybody? And some things which are absolutely relating to army. What are all those things, Amma? Turbojets, turbo propellers, propellant powders, prepared explosives, igniters, etc. and etc. and arms and ammunition, so tanks and armored vehicles. A response clear? And from this, yes, you have to separate fifth one, that is like radar operators. Clear? Radar operators, radio signals, etc. and etc.